Good evening, everybody. Chris, I must have driven pretty close to that today, coming back from the Long Beach Island, New Jersey, and we were all getting out of town because apparently the hurricane's coming right up the coast. They were expecting at least 3 inches of rain there tonight. So this is going to be a little bit of a truncated version of shorts because I by the time I got back here, got the computer set up, got the Wi-Fi turned back on, we were running out of time. But here's some of the obvious observations that you can get based upon when to start going short and how to go short. Now, obviously, making money in the market is buying low and selling high, and it doesn't matter which way you do it. You can sell high and buy back low. So the mechanics of going short is that when you signed your margin agreement with any brokerage firm, there was a stipulation in there that said that they could borrow stock from your account to lend to somebody else so they could sell it to somebody else and then it would be replaced. So that's essentially how it works is if you decide to short 1,000 shares of XYZ, the brokerage firm will sell it to you. They'll immediately go to one of their customers that have signed the margin agreement, find 1,000 shares of XYZ so they can put it into your account, and then it goes to whoever bought it. And then when that, uh, did I say that right? Yes. So then when you buy that stock back, it comes into your account, and then the brokerage firm just replaces it over in the account that they bought it. So it's not a very difficult process. And it's one that everybody should get accustomed to because obviously the market does not go up all the time. Uh, does that mean if they took it from me? No, it's John. It's just mechanics. That if you decided that you were going to sell that stock the next day or even that day, and it was sold, then the brokerage firm would have to go to another firm or another account and borrow stock from them and replace it back to your account. So it's all, I mean, it's just all accounting transaction. All right, so here's where you start getting a much better sense of when you should start adding shorts to your positions. Notice what the Dow did a couple days ago. Right here at this level, basically, you can see they were running into problems. Now, I say they, um, meaning everybody that was watching the markets could see there was starting to be a little resistance level here. And what could we see immediately? We could see a bearish engulfing signal in the overbought area telling us they weren't going up through this level, that they were probably telling us, or the market was telling us, it was topping out again and starting to head lower. Um, so that kind of puts you in a situation to say to yourself, all right, they've been taking it up. They were in the overbought area. They've hit a resistance level, and I see a candlestick sell signal in the markets. That's when I should be thinking, all right, anything that doesn't look good on the long side, let's start closing out and let's start looking for some shorts. Now, does that mean it could come back down here and do a J hook and start right back up? Certainly, but the probabilities right here are telling you there's starting to be some selling. Uh, Henry, I don't think you get any benefit when you sign a margin agreement. It's just kind of oh, standard terminology in there that they have the right to come borrow stock from you. But that's basically why you have a margin account in the first place. Is one of the benefits you have is that you can short stock, and they're going to go through the process of borrowing it from somebody else and getting it to you. Yeah, the broker gets the benefit, or the your trading company, whoever you're using, because they get to do another transaction, which they make their commissions. All right, so with that, and also with the transportation index, this is where you've got one very specific. Yes, today was the first close below the T line. However, what could you kind of project from this analysis right here? You got a bearish engulfing signal right here at this resistance level in the overbought area. They couldn't take it below the T line on, what was it? What is today? Thursday. Couldn't take it below the T line yesterday. However, when we woke up this morning, I think I saw the pre-market futures are showing that they was going to open down 500 points or so, which it apparently didn't open at that level. But it basically probably opened at that level. But on the Dow, they open one, ticks the market down. They open another one. Now they don't all open at the same time, so um, it starts moving down. Um, yes, and it did close below the T line. So here is a very strong truism that everybody should keep in mind. Whenever you start seeing some sell signal, like a dark cloud, and a close below the T line, you have to do what I always did in my younger days, was hoping that this was just a pullback. They were going to take it back up. Look at the yeah, I don't know whether I can get it over here, but the S&P 500. You can see that hanging man. Remember, a couple of days ago, I mentioned that after a gap up in the overbought condition, then a hanging man. Get ready, and then there was a second hanging man. So that would have told you immediately, or it should have alerted you immediately, that if they opened lower at some point, start closing out long positions and adding to your shorts. And that would also tell you we're starting to see a little bit of weakness up here. And we saw a bearish engulfing signal in the Dow at a resistance level. You start adding all that together. No, a hanging man is just a hanging man. That's probably a pretty. Doesn't matter what color it's his head and legs dangling down. His head and legs dangling down. So a hanging man is just that big tail to the downside. You shouldn't really have any tail to the upside. But if it's small, and you can see it's more of a hanging man than anything else, that's what it's telling you. Is they're starting to take it down, and they're having troubles getting to new highs. And the NASDAQ had a little bit of a warning. What happened the other day? Let's see. This is today. I can't even think of it. That was Monday. They gapped it up. And where did they gap it up? The overbought area. So anytime that happens, what should we be looking for? Looking for that exuberance to start showing some selling. So that's just your market analysis. What you want to basically do is say, which way is this market moving? Now again, here is that trend direction indicator. In this case, on the transportation index, you can see we had kind of a what other people would be watching would be this kind of wedge formation. And this is what our early alert would have been, is that if they were closing below the T line, uh, look for a downtrend. And now, same scenario here. They closed it back below the T line. That's not a good sign. There are two consecutive hanging men on the S&P. Based on that, can we take a short position, or should we? You still need to wait for confirmation. Now, seeing that on the S&P, this is why you should have been alerted to the fact that you're seeing hanging man signals in the overbought area. That gives you, what is the symbol? Oh, this is the S&P. The last one, yeah, your symbols are up here. Are they not showing? Mike, you might have to hit your button that takes it to full screen. Anybody else having that problem? You were scrolled. Well, no wonder you were. I hope it didn't hurt. Okay, so this is what is the benefit of knowing what the signals are starting to indicate. There might be a change of investor sentiment. And that's where you start getting ready. I mean, even though you haven't had a confirmed sell signal, any of your individual stocks, you should start watching to see if there's um, if things are starting to change. Which one have I done yet? I did no, I did the transportation index. You can see what the move of the transportation index that was that once they closed below the T line, transportation index got back up above the T line on these days. But then what did it do? It immediately did kind of a morning or an evening star signal, closing back below the T line. So if we take, I'm going to take these lines off. If you look at this, you don't look at it on its own merits. You have to also say, all right, which way is this market or this index moving? Well, it's having obviously a tendency to go to the downside, and now we're seeing another sell signal, an evening star signal closing back below the T line. What's that telling us about the overall investor sentiment? We're in a downtrend. So if you find good sell signals in anything related to transportation, it's probably giving you a much better impression that that whole sector, those sectors are being sold. So here are the steps for identifying good short positions. Obviously, our normal, meaning look at our big evening star signal that far away from the T line. Look at the magnitude of that move, and then a close back below the T line. Which way do you think this is heading? It's heading back here somewhere, either here or here. This is the number one criteria. Everybody always forgets that the signal itself, even though this didn't close below the T line, if you were aggressive and you saw you had a shooting star doji gap up in the overbought area, moving that far away from the T line, that if you were long, you went to your 10-minute chart and tried to close it out somewhere up here. If you were thinking of going short, what do we know about a doji in the overbought area? The doji rule. It's going to move in the direction of how they open after a doji. Where would you think if you shorted it right here, or saw it selling off, where was your first likely target? Back to the T line. So the number one criteria is the sell signal itself. Nvidia's had a nice steady uptrend, but yesterday it did a bearish left-right combo. Hold on. How does it do that? That's what I want to do. I want to get the other screen up so I'm not. Having that thing bobble every time we get too high on the screen. Yeah, that's what we were looking at the video. Okay. So this is observe the obvious. The first criteria is what is the strength of the sell signal? Well, in this case, we had a bearish left-right combo. Now, why is that more relevant than this right here? Because that's a shooting star setting up for an evening star signal, but it's a shooting star, evening star signal. That's redundancy. But that's a left-right combo in the overbought area. That's, remember, our top ranked signals and patterns. Knowing that you have a left-right combo tells you there's a lot more probability they're going to start taking this lower. Now, if we add 2 plus 2, meaning there's a bearish left-right combo, there's a gap down doji that closed right on the T-line. And what is our basic rule of the T-line? You can stay long until you see a sell signal and a close below the T-line, or knowing that you have a strong sell signal and a doji, what's the doji rule tell us? They open this lower, got a bearish left-right combo, gap down doji. They're going to be selling this. That's telling you that high probabilities they're starting to sell this off. The left-right combo, yes, is uh, uh, the left-right combo is a bearish engulfing signal, but the difference between a bearish engulfing signal and a left-right combo is that it's a bearish engulfing signal following a doji. And always remember, anytime you see a doji involved in a reversal signal, it's probably going to act with a little bit more strength. So a left-right combo is a much stronger sell signal than a. Now this is a sell signal, but it had one criteria that it didn't fulfill. It didn't close below the T line. This, you have less expectation. What am I not? That's you have much more confidence that after seeing a left-right combo that it's going to go down. Do you wait the next if you get a left-right combo in the overbought area? Well, if I was long, which I wasn't unfortunately on this one, and I saw a left-right combo in the overbought area curling down, that is strong enough that I would at least close out half the position, if not the whole position. This is one of those signals, a strong sell signal that you want to have in your mental arsenal, that this is one of your top ranked signals and patterns. Is it's a much stronger signal when you have a bearish engulfing signal following a doji. Same scenario on the bullish side. I don't see one, but a doji followed by a bullish engulfing signal is your bullish left-right combo, which usually, if you're short, you close it out immediately uh, because it usually is going to, or a high probability it's going to trade higher after that. What option trade would you accept? Jeremiah, that's a completely different subject. There's multiple things you could be doing. You could be doing a bearish spread, but that would be too complicated to just say what you would do right now on that one, because you'd want to know how far out Want to go what? Strike price. Many strong uptrending stocks took a hit over the last day or two. Should we discount the significance of these signals until we see a new trend is established? No, if remember, they took a hit because candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So if they're taking a hit, that means they're selling off because the market's selling off or for whatever reason. It doesn't diminish the fact that you're seeing selling when you're seeing the market trade off, because that's exactly what all that information should be immediately being conveyed to you, is that the market's selling off and you're seeing strong sell signals in uptrending stocks. It's time to take profits in those stocks. That's the whole point of using candlestick analysis uh, to 8 or 9 candles back on NVIDIA. Is that a left right combo? If you're referring to that one, nah, that would just be a doji gap up. That's that. Yes, could be a bearish left right combo, and I probably would have closed out half the position there, and then had half the position right in here. And it's also a function too that if this sold off, I can go see what the market did on that day, and the market was still trading higher. Yeah, I might have given it another day. Do you trade off real-time daily charts or David? I'm daily charts. If I'm trading stocks as a swing trader, I'm using the daily chart. Again, as a swing trader, my average trade is anywhere from 2 to 10 trading days. So this is my number one criteria. However, which one were we looking at? If I am trading off my daily chart and my daily chart is telling me I'm way too far away from the T line in the overbought area, then I'll flip to my 10-minute chart. Now, on the other hand, if I'm trading soybeans, I'm letting the daily chart tell me which direction we should be trading, and then I trade off my 10-minute chart to tell me when to. Uh, so if I'm intraday trading commodities, uh, I will. I'll usually use the 10-minute chart as my bellwether. So as you can see on this 10-minute chart, that was pretty junky. But my first analysis would be, which way do we know lean hogs are moving? Well, we can't really tell. So that's a pretty good indication of why you wouldn't be trading that chart that day or today or whatever. Okay, another thing. That's the 10-minute chart. Is if this is a pattern, wave one, there was your sell. That would told you when you closed out, a doji gap down. There you might be buying it back. J-hook pattern expectation. So this is why not only knowing what the signals are telling you, but what type of patterns are setting up. Suzanne, if you've registered tonight, you should be getting the recording. If not, just email abraham@candlestickforum.com and I'll just request the link and he'll send it to you. More dangerous swing trading futures? Not necessarily. No, I've made huge profits swing trading futures, but I'm trading things like I'm trading things that are not fast moving. This is the back. So I might be trading corn, trading that trend. But then if I see corn looks like this, nah, I'm not trading it. Might be trading it here off that strong signal. So, and there are times, I don't know whether I've got it on here or not. There are times when you can see a trend occurring in one of the commodities. I mean, if you get stuck in something like this with hogs, you can see that swing trading those for 5, 10, 15 trading days, it's got good trends. And then there's times when you get out of the trend and go someplace else. Can you please go back to Bentley? This is oh, yes. So this is what I was going to get to. Is here's a very simple, what do I say, trade pattern that you should be aware of. You can see this is wave one. This is starting, this is wave two going into wave three. But what do we want to see on wave three? We want to see it get up through this level, confirming wave three. The fact that it did a doji gap down, I would have closed this one out today, because if they can't break through this level, what's that tell us? Now we're at least stuck sideways, or may even be drifting lower. I usually trade live cattle, feeder cattle. I don't know, I think live cattle graze out in the pastures, or feeder cattle are fed corn or whatever, depending on what type of beef you want. Would it become a wobble? I mean, a bobble pattern? No, it would just be confirming the J hook pattern. A bobble pattern is when you can see a resistance level that everybody is watching, like the 50. All right, let's get to shorts. That's what we were trying to do here. So we recommended going short on Mavis because of this feature right here, where they were taking it back up. And if they can't get back up above this level, everybody says um, um, no, Bill, I usually get people off topic. Um, now I forgot what I was saying. Oh, so we sorted Mavis, maybe not here, but look at the obvious. Look what happened. They came down to the 50. They came back up to the T line. And what happened here? They did an evening star signal. What did they do? They came back down to the level they were supporting. So what can we analyze off of that chart? Wave one, wave two, wave three of a bearish J hook pattern. That was a good, strong sell signal. Now the other thing that let's see which one I can segue right into this is, which direction is the overall trend? Well, this one looked like it'd been heading lower, hit the 50, bounced up to hit the 200, bounced up to the 50, pulled back, came back up again, looked pretty good, maybe heading up, except for the fact that it kind of fizzled right there. And where did it close? Back below the T line. As it starts trading lower, what can we um, assume? That the investor sentiment is still making this a downtrend. That just improves the probabilities, knowing what the overall trend is. Um, that we're still the better probabilities that we're still in a downtrend. Whoops, let's get rid of that. There again is your evening star signal in the oversold or overbought area, followed by a doji sandwich. That's your number one criteria to tell you that's where they failed this uptrend. So the signal is the first confirmation. Then the strength of the signal adds to that credibility. Look where we recommended shorting CALX on a lower open today, because look where it kind of ran out of steam. And not only was this a bearish engulfing signal, this is what we call a bearish engulfing signal with a booster. I mean, they were selling it off, bearish engulfing, but notice how it had kind of a booster move, pushing it down further. This one I would definitely be shorting again on weakness tomorrow, because what would you have happening? A bearish engulfing signal, failure here, open lower. What do we got going on? The doji rule, which means we probably got a doji sandwich. Where's that taking it? Well, if that's the first one, they're probably heading back down to this level. So this is just simply putting 2 plus 2 together just to kind of confirm which direction a price is moving. NIO, the same scenario. Look at your dark cloud. This is why I always tell people learn the ABCs of candlesticks. 6 sell signals, 6 buy signals. A dark cloud, and then they started trading below the T line. That told you that signal right there told you that they're at least coming back to the T line. We could consider starting to go short. I haven't even checked any of the others. Same scenario there on Y and QuantumScape. Here's a good example that you start to see an indecisive trading right here at what could be perceived as the last resistance level. It's still heading lower. So where would you think this one was heading for? They're probably coming back to test this level. Should you hold a short position on NIO? Yeah, if it came down, if I was short, I'd still be holding the short position to see whether, again, your stochastics are heading down. You don't have any buy signal. All you've had right now is they tested the 200, but that's not a telling us there's any signal there. It's just telling you to be a little bit more diligent watching these levels. Now there's a wee little teeny gap right there, so might even come down through that level. So I'm watching basically if I'm shorting something, where could it go? Maybe it's bouncing off the 200 or the 50, or it's heading down to fill a gap. But that's the advantage we have of seeing what type of signal is created when it gets to those levels. Very simple on a candlestick signal. The bigger the signal, the more compelling the bears are in control in this case. Rick, yes. Now remember, just because it's being, which one was it? Was it on this day? What is today? Can't remember which day it was. Was it on, what is today? Today's the 8th, 7th, 6th. Yes, that one was a good one to be bought on positive trading. But remember, just because it looks good at the time doesn't mean it's necessarily going to be a good trade. So the important factor of candlestick analysis is it's telling you when the probabilities are when it's time to buy and when to get right back out again. So if I had bought on this day, which I didn't because I had sand in my shorts, the next day when it came back down through this level, what'd that tell me about my J hook pattern? It probably wasn't there. All right, Chris, Bill, you need to hug and make up. Yep. So I when I improved my trading when I realized that about 30% of my trades aren't going to work. So if I had bought on that day and the next day it was doing this, I just tell myself that didn't work. It used to be, oh man, I took it personally that I had a good trade set up and it wasn't working right. I'm going to wait for it to work because it looked like it was working instead of saying it's not working. Close it out and move on to something that's got better probabilities. Rick, good for you. That's exactly what should have happened. Because of the doji rule, it was going to move in the direction of how they opened after a doji. Now, if they had opened here, then immediately started taking it higher, you had a green candle. But the fact that they opened lower and then started showing more selling, that showed you that trade failed. Go on to the next one. You're always told to cut your losses short and let your profits run, but nobody ever tells you how to do that. Candlestick signals has very simple rules. If that trade was bought here, it's because of a J hook pattern. When it started trading back down here, that J hook pattern disappeared. Close it out and take those little green pieces of paper and move on to another trade. A lot of people like myself would sit here with saying, well, it looked pretty good. What should I do now? What should I do now? Now I know what to do immediately. Close it out and find a better trade setup. Oops. Okay. So anytime I see a sell signal, that's good confirmation. Not good. That's not the right word. That's good indication there's a change of investor sentiment. Then if I can add things on that chart, no buy except intraday. Oh, yeah, but we didn't know what was happening. Let me go. Let me finish this. What was that one? I forgot. Oh, QSI. So look at our evening star six. What other credibility can we add to that uh, position? The fact that he did it right here at the 200-day moving average, and they closed it below the T line. What'd that tell you that everybody was doing when it got up here to the 200-day moving average? They were selling it. They were taking profits. What was it telling us when they closed below the T line? That the sellers were in control. You look for the next target, which would have been the 50. Hold on to your individual ones, Ali. Well, two of you have done it. You could go short on this. Now, you also have to be aware of the fact that you might have a wedge formation setting up. So you could go short on this one, then you watch your next target. Again, going short would be based upon a lower open and the doji rule, which says it's going to move in the direction how they open after a doji. We did this one. Yeah, so the more pieces of evidence that we can put on, which the first piece of evidence is the evening star. Second is obviously seeing it failed at the 200. And third, the fact that they closed the evening star back below the T line, that told you the prospects for more downside was that much greater. We recommended going short on this one today. Now, I wouldn't have shorted it because it opened and immediately started trading higher. So once that happened, what was that telling you as soon as it opened? They weren't selling it off. There was buyers there. So that would have kept you from buying. Now, does that mean you still shouldn't go short on this one? If this opens lower and starts trading lower, this whole area of selling is starting to take effect. On 24th, we had a bearish engulfing. Why we did not short it? What was the previous signal? Stamp. You could have shorted it. But now, remember, just because the signals are working in the right direction, that means you still have to analyze what the next signal is. Now, if I had shorted it on this day or this day, I'd still be short because we haven't quite got to the oversold area and we don't have a reversal signal. All we have is right now is a bounce up off the 50. And like any other trade, just because the trade is a good trade doesn't necessarily mean it goes up every single day. So right now, if I was short, I'd be staying short because it didn't close below the T line. It could be getting ready for a reversal. But again, if you're RC, if you're referring to this one, it hasn't had a reversal signal yet. That's not a signal. That's just a up day and a downtrend. So if I was short, yeah, I'd probably cover it if they had enough strength to bring it back up through the T line. So this is your first observation on this is which way is this trend going? Well, obviously, no, that's not a belt hold. That's just an up day and a downtrend on stamp. Obviously, we're in a downtrend. What's acting as the resistance level? The T line. What happened when they came up to the T line again? They had some selling or sell signals, which told you the T line was still acting as resistance. You could have shorted it down in here because where do you think the next target is? Probably the bottom of this trend channel. No, a belt hold is a big signal. That was still just kind of in the, that tells us they moved out of the trading range. The T line is the most effective indicator to keep your emotions out of your trading. And that's just not an observation. That's me. Ever since I've started using the T line, have become, or my decisions to hold a position have become much more profitable. That's not really a belt hold. Again, it really didn't come out of the trading range, but it is a bullish indication that they're not. Uh, yeah, and the one on stamp wasn't really that big. This is just basically telling you they aren't selling it off yet. It's still trading above the T line. Okay, back to the shorts. Anytime I see something like this, where you can see there's a resistance level, there's a bearish left-right combo, where was your next target? Down here. So this is all visual evidence that the bears are starting to take control, and it's finally confirmed. Um, uh, Finally confirmed by closing below the T line. Mike, the 200 simple day moving average is this red line. The blue line is the 50-day simple moving average. This is what every major money manager makes their decisions from for their portfolio. All we're doing is seeing what their decisions are at those levels. The 34 works very effectively, fairly effectively. it's worthwhile having on your screen. But here's the most important one. The 8 exponential moving average we've called the T line or the trigger line. A very simple concept. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line, with the caveat that the further away you move from the T line acts like a natural support and resistance level of human nature. When you have candlestick signals, which are the graphic depiction of investor sentiment, and then you put the T line on, which is a kind of a natural support and resistance level of human nature, that's an extremely powerful combination that uh, uh, puts the probabilities in your favor. And again, takes the emotions out of your trading because now you're trading off of probability factors. So the probability factor is anytime I see a sell signal and a close below the T line, Bert, you should be getting this automatically if you registered tonight. The T line is the 8 exponential moving average, yes. And I tell people, don't take my word for it. Put it on your charts and see how often, when you have a sell signal and a close below the T line, you can stay short until you see a candlestick buy signal and a close back up above the T line. So here we got shooting star, doji, little spinning top, hanging man, doji, bearish confirmation. Now what can you do with this one? If this opens lower, what's the doji rule telling us? They're going to trade it lower. How much lower? Probably the same magnitude as this. That means they're likely to come back down at least to here or here, which would correspond with here. Again, you add all that up together, and it's telling you, look what happened here. This is the difference between knowing what the signals are illustrating and seeing what they actually do. This is that's probably a pretty convoluted statement. Indecisive, and where were they indecisive to? Right back here to the T line. That told you they weren't selling off hard. The T line was still acting as a support level. Now you've got sell signal, spinning top, doji, and a close below the T line. Not an indecisive close below the T line, but a decisive sell signal. Because the 20-day moving average doesn't work very well unless you're in a big, strong, steady uptrend. The 34 but that's where you can make your own decisions. As you can see, this chart isn't that cluttered. Doesn't have a whole bunch. These two right here, we assume, is what everybody's watching. So we have the 34, but most importantly, we have the T line. So if you want to put the 20 on, it's not going to clutter up your chart. And then if after a while you realize, well, the 20 works better than the 34, or the 34 works better than the 20, take one of them off. I just don't use the 20 because usually the 20 becomes much more relevant when you have a strong, steady uptrend for quite a few months. I don't use Bollinger Bands, but same scenario. Put it on your chart. See if it works well for you in combination. So I've got the basics, and the basics are based on the signals themselves. Then whatever else you put on should just be enhancing your ability to see whether those signals are confirming. No, the 50 and the 200 are simple. The 34 and the 8 are exponential. Then we also have the little 3T line on here, which is a 3 exponential moving average, which kind of enhances the T line. So what did I just do? Oh, EVC, all right. And so this is again where you see where the sell signal occurred, right at that level. What did that tell you about your J hook pattern? It wasn't doing a J hook. It was probably doing a double top. Where would you go short? If you saw this opening lower the next day, that's when you start shorting. Again, just visually analyzing or recognizing, well, I've got a doji right here at the breakout level. If it opens lower the next day, what did it tell me about the breakout? It didn't occur. And so if it didn't occur, I don't have a J hook. Now what do I have? A double top if it opens lower after that. So that's where you just kind of add up. This is where the sellers are taking control. And then you also want to know when it's time to take. Uh-oh. Wow, did I do that wrong? And RL. Well, what happened here? AMBL. Well, Shazbots. That's not coming up. Maybe that's it. ARBL. Oh, yes. So, now, yeah, maybe it is ARVL. But there's your strength for the short side. I don't even know if that's the right one. But in this case, if you were short, that's in the oversold area, seeing a bullish engulfing signal. That's telling you, I'm getting ready to start covering this short position. Or I would have a safety stop right here at yesterday's open, because logic says if they start doing a bullish candle up through that level, that's where the bulls are stepping in. So let's take a look at the few that we have recommended. Ruckus, kind of the same scenario as White, watching to see what happened here. Now, did this fail? Not really, because they opened it lower and they were trading higher after where they opened. Oh boy, I don't have the answer to that because I didn't have time to I would guess that CALX would be a good short if it opens lower tomorrow because of the bearish engulfing with a booster, now followed by a doji sandwich. So Ruckus wouldn't have executed today, but would not be off the chart or off the watch list. We'd still be a buyer of this if it comes up through this level. Because that would still confirm your J-hook pattern. Space. I held on to this because it really wasn't closing below the T line, and fortunately, as I was driving home from the short today, they must have announced something. Yes, Will, and that's exactly why you use the color of the candle to tell you what to do. If this one, let's say you were ready to go short on space, if it opened lower and it gapped down, say, all right, I'm getting ready to short this, but then you see that that candle's green, that immediately tells you they're buying after they open. That kind of keeps you from getting into a bad trade. On a long position after a doji evening star in the overbought condition, would you close the position at the beginning of the next lower candle open or wait for it to close below the T line? If you're still that far away from the T line, I'd probably close it. But and that's also a function of what is the overall market doing. Hold on to the individual ones till I get finished, which I'm almost finished because I didn't have time to. So there were still some good traders. Moxie. Well, what happened? Moxie, as you can see, opened lower and immediately traded higher, continuing that uptrend. Sava has been a good one for us in the option room. You can see the obvious. They could never close this below the T line. And TLC we recommended, was it yesterday? Because of the kicker signal. Anytime I go through my scans and I see kicker signals, they go on the watch list immediately. And I thought there was another one today. Oh, yesterday I think there was this one as a kicker signal. And it pulled back today. Still watching. If this opens positive and starts trading positive tomorrow, that kicker signal is still in effect. ARVL. No. No. Chris, the definition of a belt hold is that it trades way out of the trading range. Like this. Well, that's not quite a belt hold, but had this been opened here way out of the trading range and closed back here, that would have been your bearish belt hold. ARVL should not buy based on bullish engulfing. Yeah, it still needs to close above the T line to give you that final confirmation. Okay, and then the biggies. Amazon held up reasonably well today. Whoops. So it did the J-hook pattern. It opened lower. Hold on. Okay. No, that's not a bullish engulfing signal. Where does a bullish engulfing signal occur? When you're in the oversold area. That's just a bullish day in an uptrend. Apple held up well. Now, this is where you have the sound faded. Whoops, how's that? Must have moved the microphone. This is where you have an advantage of the visual candlesticks. Everybody's going to say, oh, Apple is down $1.33 today. Not good. We can see that it wasn't bad at all because they opened it down here and closed it up here. That gives you a whole different perspective on what the strength is on that trade. So here's a dark cloud on Netflix. Makes this very simple. If they open this lower tomorrow, start trading lower, you got a bearish engulfing signal in the overbought area, stochastics heading down, and they're going to be trading below the T line. There's your first likely target to go to head as a short. And Tesla, no, that's not a piercing signal. A piercing signal is going to occur in the oversold area, but it's got piercing signal characteristic just by the observation that they opened it here right on the 200 and the 50 and brought it back up about the halfway point of this candle, that's probably a good indication that you can be buying this one on strength because everybody saw they were supporting at the 50. Okay, I guess that's about all I've got for tonight. Are there any general questions on candlesticks? If not, Rick, go ahead and do the double line and then try to keep your request to ones, or we will be here for a while. And Rick, do the next double line. All right, I'll try to do some of these real quick. CCIX, make this big enough to. You can stay long on this as long as it stays above the T line, and obviously you want to see if it can get up through the 50-day moving average. GAN, that's a. I might have already come up with that one myself on scans for tomorrow because of the bullish flutter kicker type signal, which means if this opens positive, you can buy immediately because they opened it here, closed it here, gapped up, and did an indecisive day. You get ready to buy this. It tells you there's been a dramatic change of investor sentiment with the bullish flutter kicker. On BTX, this one is if you're short, you stay short, but it really doesn't have a great signal. That's not a signal there. That would be in the category that there's probably better trades out there with much better clarity as to which direction it's going. Budweiser, that's a bearish left-right combo, gap down. Now you've got the gap down doji. But if you were short, I'd have a safety stop probably at yesterday's open. Because if they came back up through there, that tells you the buying is still there. That's when I'd cover the short position. Boeing, that's another one where with it just hitting the oversold area, bullish engulfing, if they open this positive, I'd be out of the short position. I probably wouldn't be going long until they break this downtrend. And BSY, again, that one you could possibly be going short. However, you can see, I thought I got rid of that thing. You can see how you have a wedge type formation. YY, if you're short, you stay short. I wouldn't be going short here. You should have been going short in here. Right now, with that little gap down in the oversold area, to have a safety stop. Is that a symbol? Good. That one, if you went short, you have to watch to see what happens once it gets to the 200. I'm sorry, the 50. Marna, a bullish engulfing. If I had closed this one out yesterday, which was the right thing to do, maybe think about buying it back on positive trading from here. Labu, not taboo. Labu, that's a toughie. If you're short, you can stay short. But if it starts trading positive, you can see now you've moved sideways. I'd go someplace else if you were short. Micron, you can observe the obvious. You're kind of in a downtrend. The 50 area seems to be a resistance, and then you had your doji best friend gap down, and then your kind of your double doji failure. I would stay short on this one, but obviously you want to watch to see what it's doing down here right at this support level. So if I was short, if the market all of a sudden started exploding to the upside and this was trading positive tomorrow, I'd cover the short position. Chewy. Ah, ah, I'd be someplace else. Oh, buying a put, I would be more indicating or more thinking that it's going to support here at the 50. You could be buying puts on this, but if they got back down here, I'd be watching a little bit more diligently. Were you wanting PTLR or PLTR? PLTR, another one you stay short because this is not a reversal signal. That's just some buying. This one you could still be shorting if they open it lower and start trading it lower. Just to make sure that I'm not doing something wrong. Yep, that was any. You can stay long on this one, as long as it stays above the T line. And Dare, fry pan bottom, you could still be buying this one on positive trading. CrowdStrike. Oh, it did open lower, came back up. If you stayed long, you stay long. Just don't let it close below the T line. Facebook. This one you can short if it opens lower tomorrow. Your Barry Stogie sandwich probably would be bringing you back down to the 50. And TQs, that's a green candle. What's your T-line rule? You can stay long as it stays above the T-line, which that looks like it. Let's try to do the NASDAQ. It's right on the cusp. Closed right on the T-line, so it'll be important to see how they open tomorrow. NVIDIA, if this opens lower tomorrow with that left-right combo gap down doji, you can be shorting it. Carnival, you stay short, but they bounced right off the 200. So if you were short and you saw that it hit right here in the oversold area, that's where I would have, as soon as I saw it hit there, I'd pull up my 10-minute chart because that's a logical place where everybody's going to start covering their short position once it supports on that level. So if I was short, I'd stay short, but if it opened positive tomorrow, probably close it out. CLSD, all you can do here is stay long. I wouldn't be buying it here, but if you're long, you just stay long. And DRN, I would. If you were long, well, let's see. If this opens lower or trades flat tomorrow, you can't even say that. You stay long on this as long as it stays above the T line. So I'd have a safety stop. It should open positive and trade positive. I'd put a safety stop just below the T line. It shouldn't be heading in that direction. And ARC, nothing. If you're short, stay short. That's not a signal. That was just a bounce. Now you watch to see if they can get back up above the T line. If you're short, you want to see it open lower and start trading lower, which would tell you that today was nothing as far as a signal. AMGN, that's not a pretty chart. You're in a wedge. I'd be someplace else. INO, kind of the same scenario. I'd watch to see what they do. It's not a reversal signal right now. It's a bounce. So we have to see whether. Oh man. See what they're doing at. So it looks right now they're trading the Dow down another 40 points. That's the futures. XELA. Well, that was not a good day. Let's make this bigger. If this opens lower tomorrow, I would close it out because that shooting star told you they've taken some of the wind out of the sails. And CFG stays short. And see how it failed up here. Kind of, I would suspect your next target is the 200. Did we do dare? I thought we did dare. Dare has to open positive. Nail. That's not good. I'd suspect they're bringing it back down to the 200. IBM. Eh. Eh. Rufus, I wouldn't be long or short IBM right now. There's just no direction to it. And Negos, when they move up that much, definitely want to be taking profits by the end of the day. Most people are happier than a pig in doo-doo if they can make 10% on their portfolio annually. If you've got a trade that just made 300, 400%, take it off the table because what do you think everybody else is going to do? The smart traders are going to be taking profits. So, oops, I didn't even give the analysis. GFL, Carrie, that's kind of an ugly chart. That has no direction to it. Neg, here's another thing that you want to keep in your mental arsenal. If you see a big, huge day, like you saw on this, take off at least half. If they open it lower the next day, close it out immediately. You don't want to even pay attention to this one until it comes back up through this level. Costco. Costco, nice steady uptrend. You can see wave one, wave two, wedge, wave three. Just stay long as it stays above the T line. And wave fair, that's kind of an ugly chart. I wouldn't be long or short on this one, William. Just not a good trend right now. Penn, you're still in a downtrend. Stay short. WHD. Now this has done a bullish left-right combo on the 50 at the same level it tried to bottom out before with inverted hammers. I would be a buyer of this one if they start trading back up above the T line. The bearish, yeah, looks like it. Do we need to consider all basic candlestick patterns works better at the oversold, overbought area, but not in between? That's a general statement. You're also going to find good signals that are implying, even though they're not in the oversold area, that maybe a J-hook pattern is setting up, or a fry pan bottom breakout. So those don't necessarily, remember, your signals and your stochastics may not be in the oversold area if it's confirming a pattern breakout. Jay, I was at the Long Beach Island in New Jersey, and we decided to get out of there because that island has a reputation for that when everybody tries to get off, they all do it at the same time, and it takes hours just to get off the island. So we left early today and came home. We were supposed to stay until Saturday. In your experience, does the hanging man at the top of a trend more often result in a downturn, or is it more like a doji with a direction determined on how it opens the next day? Deborah, that's yes. The, the answer is yes, yes. The the hanging man signals are telling you there's a potential of a reversal, and they're a very simple rule of the hanging man. Just like the doji. If they open it lower the next day, they've reversed things. Now, in this case, they gapped it down after hanging man. I would still be inclined to have some long positions and some short positions in the portfolio because it's still non-directional in the sense that you got sell signals, but you're not closing below the T line. That's usually a good indication that there are some good shorts out there as well as good longs. And that's the whole point of analyzing what is the nature of the market when you're up in the overbought area. It could continue to go higher for weeks, but at this stage of a market trend, there's going to be some good short positions at the same time. It seems that many of the short signals lead to short time-wise downtrends. Do you approach these short signals different from uptrend stocks in terms of option selection? Yes. But if I was buying options on shorts, it would be on the basis that there are going to be some short positions. Bah humbug. What was the one I was going to use for an illustration? That's not it. I can't even remember. Let's see. Was it Max R? Oh, ah, darn. I didn't have everything organized well enough. Now I forgot what I was. Oh, so no, I'm buying options on the basis that there are going to be some stocks that might have it's time that they're selling off because of the strong sell signal. But I would be more cautious that if I was buying puts on Nvidia to see if it's just doing a J hook pattern or something because of the current uptrend. If CLL moves up tomorrow, would you go long if it shows a doji sandwich or possibly not wait for a signal rather than just a small gap up? No, there's no reversal signal here. And there wouldn't be anything on here that would create a doji sandwich. Let me make sure I'm reading this right. Moves up tomorrow, would you go long if it shows a doji sandwich or possibly? Yeah, right now, if I was short this one, I would have probably covered half of it as it was. Let's see what it did at the 10-minute chart. Yep. So down here, they must have gapped it down right on the 200 and started bringing it up. That's a really a good place to start covering your shorts. But at that, yeah, there's no doji sandwich and there's no reversal signal. It's just people buying at a level that they're all watching. Wayfair, you could go short. It's still just not a very dynamic chart. I'd be someplace else. That's what I thought, that Branson was sending himself up into space. So this is yeah, this is a story stock. Obviously, there's no fundamentals on this one that would make you say, "Oh, I'm going to buy in this because they're doing well." This is a story stock. Everybody's trading it. Neg trailing stops. Well, you wouldn't have had it. Let's see what the 10-minute chart looked like. Guess this was, they did it move up. Can't tell whether that was. Yeah, on something like this, yes, you could use trailing stops just below the 10-minute T line. So when you see something moving big like that, yeah, immediately go to your 10-minute chart. Dash, that's a another one where you had a hanging man, doji, gap down. Now, if you stayed long, it has to open positive. If it opens lower, close it out. That means they're not coming back up above the T line. And pod, there's your bearish harami. There was your downtrend. There was your confirmation. Right now, you just stay short. Looks like they gap down through this level. You stay short until you see a confirmed buy signal. Today, it only showed a bounce, not a reversal signal. Did I do this right? CFG stays short, anticipating they're heading for the 200. And MGM, same scenario. That's not a reversal signal. That's just an update and a downtrend. If this opens lower tomorrow, I would stay short, anticipating they're still coming down to this first level. An ease, yes. The formulas for TC2000 are in the little folder down on your very right hand corner of the this page. Very bottom right hand corner, right below send, there's a folder. The formulas for TC2000 are in there. The formulas are already on Metastock. You can just plug them in, and you can buy the package, and it all plugs in automatically. I think I think the formulas are over on TradeStation. So the formulas are all over the place. I mean, we've been sending them out and working with Ninja Trader in the past and Thinkorswim. But the best scanning softwares are either Metastock or TC2000. They're oriented towards scanning. Home Depot, eh, eh. If you're long, it has to open positive tomorrow. If it opens lower, you can see the 50 has acted as resistance. Thank you, Jason. Stay short on CF. Yes. Use the T line as your stop. Lou, yes. Always wait to see what everybody is doing. Amazon, stay long. Jemiah, stay short. Again, this is not a reversal signal. And the fact that you're not in the oversold area yet should be a little bit more suspicion. Now, this is a belt hold. There's your trading range, and they gapped it way down here. Basically, what a belt hold signal does is it tells you that all the sellers are out and the bulls sopped up the rest of the selling. That means there's no sellers in the way. Any buying will move it up nicely. And Jemiah, another one where, I'm sorry, Zoom, a dark cloud. If this opens lower tomorrow, you want to be shorting it. Oops, cat, you're in the way. Cat, you're in the way. We're going to have another cat auction. EW. Oh, hold on. The cat just bothered me. Now I had a. No, you haven't seen any sell signal. I just put a safety stop on EW just below the T line. And it seems like, Kitty, you hold on. Stay there. Cat, you're not listening to me. This one you should be out of. Probably on that day right there, or definitely on that day. If I wouldn't be short, but you definitely don't want to be long this one right now. ZH. Is this a morning star and a reversal? No, that's not a doji. That's just an up day and a downtrend. Your stochastics aren't finished. I would not be, yeah, I wouldn't be going after this one. There's no signal there. This is your stick sandwich. Look at your kicker type signal. A stick sandwich is a big up day, big down day, big up day. That implies more upside. How do you identify a reversal signal opposed to an up or down day? A reversal signal has a signal. Just because it opened lower and traded higher doesn't mean that's a signal. That's just a bounce. Whoops, sound is low again. Sorry about that. We have all the formulas, yes, and I think TC2000 have all our scans, or you can put the we have all the formulas right on in here or in the on the website, where you just plug them in. XLF, stay short. DHR, no reversal signal, still okay. All-time high. Yeah, you give less relevance to a doji sandwich in the overbought area, but right now there's nothing to tell you there's any sellers taking control. No, you can have a bullish belt hold at the bottom or a bearish belt hold at the top. Cat, you're just about ready to be sold to the lowest bidder. That was yeah, that's a reversal at the bottom. You're also going to find where things open up here and come all the way back down. Sound fading because the cat is knocking things around. All right. What was the stick sandwich ticker? I forget. Now the cat is walking on the keyboard. Kitty, she was mad because we left her for a few days. Lows, just stay short. Uh, JB, this is just not a good tradable chart. It's if you're holding it long term, you can stay long term. It's just not a good trader. And CPE, see, that's not a signal. That's just an up day. Your stochastics are still heading down. If you're short, you just stay short. And crude oil was apparently bounced up today. Let's see what it did over here. So that's crude oil. Still kind of hovering right around the T line. Bounced off the 34. Still could be heading higher. UPS, not really a fry pan bottom, but you can see how it's supporting right off the 50. So if you're long, you just stay long on that one. Prospects of a fry pan bottom breakout, it's not really a fry pan bottom. And no, look at your stochastics. So you're not in a fry pan bottom. Your stochastics are getting overbought, and you're right about at a potential resistance level. If you're long, nah, I wouldn't be going long on this one at this point. AMD, you get ready to short this one if it opens lower and starts trading lower. Look at your big evening star signal. The bigger the signal, the more compelling there's been a change of investor sentiment. And BBIB, that looks good. That's setting up for a J-hook type pattern. And Marna, yeah, yeah. Remember, the bullish engulfing is less relevant here, but it is telling you they're not letting it. They don't want to really let it close below the T line. And snow, you could be buying this one, but I'd be waiting for it to kind of break out through this level. And root, uh, it, not so much an inverted hammer as it is just a doji, but makes this very simple. If you were short and this opens positive tomorrow, close it out. Okay. Guess that's about all of them for tonight. So it'll be important to see how they open the markets tomorrow. Again, we've run into a resistance level with sell signals on the Dow. They open it lower. Got to assume they're trading it off. All right, everybody. We'll see everybody bright and early tomorrow morning in the chat rooms. We'll see you then.